What is going on, everybody? It is January 25th, 2024. Day log episode over NQ. Actually, it's the 24th. I'm sorry. But this is going to be the day log episode over the live stream today. If you guys weren't there, I'm sure a lot of you were watching ICT, just fine. But today on NQ, I took one trade on NQ, which is a loss, and I took a trade on ES using the six sister approach. And I thought it was a really good example in live trading where you can utilize that, especially after you take a loss and you still believe the analysis and everything is still valid. And I'll show you how NQ already reached where I was looking for, and ES was still lagging behind NQ in terms of price action, in terms of where the draw on liquidity was for ES. I still thought ES had a lot of room to go. So I think it was a really beautiful example in real time on how to utilize that. It was actually the same trade that ICT took on ES, but he, I believe, took a loss on it or something like that. I'm not particularly sure. I haven't gone over his live stream. So let me know in the comments what you thought of the live stream from him today and over the last 2 days. I know that there's been a lot of controversy over it. Personally, I think he knows what he's doing, if you catch my drift. Looking at the monthly time frame in here, we have 6 days left. We got above the buy side liquidity there. I still believe that there's a lot more room to go, but we've now created all-time highs on the B adjustment. So if you don't have that on, we've already had all-time highs. I've discussed this. I've gone over this multiple times on live streams, so I'm sure it's going to be asked again at a future point. I have it on. Weekly time frame, we got above that buy side liquidity pool. So rolling into Thursday and Friday, let's play devil's advocate and just play the weekly template profile, because one of the days is setting the high or low of the week. So you have to think, when you're in the middle of the week, has the low of the week already been set, or has the high of the week already been set? What am I anticipating? Because you have 2 days left of the week, so you have to be thinking in terms of the weekly profile. I'm constantly thinking in that. And the weekly profiles, it just means one of the days are going to set the low or the high of the week. And if you've already been looking for higher prices, and now we've gotten above a major buy side liquidity pool on a Wednesday, we could possibly, not saying we are, but Thursday and Friday, we could drift off lower. And I'm curious to see if that's what we'd want to do. If not, then we would want to continue higher and maybe just close out the week, Thursday and Friday being the high of the week. As far as I'm seeing right now, I don't have enough information in real time currently to make that decision. If we start rolling into New York session, where I'm seeing a lot lower movements and there's good sell side objectives, bearish PD rates being respected, we may want to revisit this inefficiency below price. So this for value gap in here, we just slightly IOFED'd it on Tuesday or yesterday to move higher to get above the buy side liquidity. And I think somebody asked me, how did I anticipate that? Well, if you're ever in a fast ranging market and it's moving quickly and you're near in proximity to a drawn liquidity like this, I'm not anticipating a full retracement. I'm just anticipating an IOFED, a small retracement into that, and then expanding into the buy side liquidity. And you can take that same information and put that into a 5-minute chart, put that into a 1-minute chart. So that's how you anticipate IOFEDs. To me, it's more or less experience and having an understanding of how IOFEDs work and the mechanics behind it. So, but that's basically a tip. Curious to see tomorrow, do we just expand higher, overlap this wick in here, and run above yesterday's high? Very well could be. I don't want to call any tops in these markets. That's a number one ICT tip, is we're not calling tops or bottoms. We're not trying to be that person. I know there's a huge thing around turtle soups. To me, that's, for a newer student, I don't think that's a high probability model personally. I think waiting for evidence that price would want to move lower or higher is going to give you a higher win rate, and it's going to protect you a lot more. So looking at the 4-hour time frame, I'm going to actually put this on all time frames just so we can all see that we've gotten above this buy side liquidity pool. You have to keep that in mind. Looking at the 4-hour time frame, we had a nice drop off lower today. So that was during the PM session. I will go over the trade today that I took. So rolling into the AM session, Let's go down to, I don't think the 1 hour 4 really has much information currently. Looking at this 4-hour time frame or 15-minute time frame, I'm looking for this buy side liquidity pool to be met. So I'm looking for this coming into New York. And it's the reason why I was not willing to go short today at all. There was no reason for me to look for shorts. The higher time frame narrative is bullish. Buy side liquidity, a major buy side liquidity pool is resting right above us. So everything today for me told me not to short and only look for longs. And that's the best case scenario when you could see a clearly one-sided market. You know exactly what you're looking for and what you're waiting for. When we dig down to these lower time frames, I'll show you where I entered, and ultimately there's nothing that I would have changed. There's nothing that I would have done differently. It's just simply the cards that are dealt. So I was waiting for the macro, particularly right before the silver bullet and digging into the silver bullet. But we also had a news event driver about 15 minutes before the silver bullet hour, and I was waiting for that news event driver to play out. So you can see with the open, we dropped off lower in here, taking out sell side liquidity. In the live stream, I'm not going to put it on the chart. Maybe on this one, it's going to be on there. I'll pull it over. We had the regular trading hour gap. So if you toggle this to regular trading hours, there's going to be a liquidity void, basically an inefficiency in price where price is not traded into yet. And I was annotating in real time how all I'd be looking for is the 25% of this range to be met. So if you look at the entire RTH gap, in times where you're in a very bullish environment, I'm looking for higher prices that day initially, and I have a large opening range gap. All I'm anticipating is just 25% of that to be reached into. So even though there's nothing to the left of us on this chart where price, only thing we did was take out sell side liquidity, but there's no inefficiencies in here, I know that we're also meeting the 25% of the RTH gap. So that's in confluence with the idea that I should be looking for higher prices. And I'm understanding that it's rejecting off of that RTH gap. We're displacing higher. When I dig into these lower time frames, this is what was probing me to go long. It was the understanding that, well, we've taken out sell side liquidity. We have a buy side liquidity pool above us on a weekly time frame that I should be seeking. And we're moving into the macro right during the silver bullet. So in here, we started to displace higher and we started to get above this SIBI here, which I was treating as an inversion. So we closed above it. That'd be an inversion for a value gap. Same with this one here. And we were respecting multiple bullish order blocks. So we had this down close candle. You take out just the mean threshold, look at where the bodies are respecting price. We displace higher again. We have this down close candle, look at where the bodies are closing. Displace higher again. Another order block in here. And I ended up going long on this candle where we're digging down to that order block. We are inside of this inversion, inside of that inversion fair value gap. And I was looking to target the buy side liquidity above this high here and the weekly time frame buy side liquidity. There was one other fair value gap in here, this small little inefficiency in price. They extend out to your right. So it's the only one that we did not close above. I wouldn't have done anything differently. And that's a point in your trading career where you're so secure and confident in your model, and you have a complete understanding of what a consistent profitable trader does. Is you're so content that I'm going to take losses pretty frequently, probably. And my model is not always going to be perfect. I'm never going to be at a place in my trading where I can never take losses and I can never be in a situation where something like this, where I couldn't not see it. That's the point I'm trying to make is even with enough experience, there's times where you can't see a loss coming. You can't see that from happening. And of course, that's why we have risk management. But the point I'm trying to make is there's nothing where you can improve upon. And maybe with time and experience, there's things that I maybe would have saw, but I think I would have taken this 100 out of 100 times. And that's where you become mature enough to say, all right, well, I took a loss of my model and it told me to do everything, right? So we dropped down lower, and I'm not going to place my stop loss underneath these lows in here, because at that point in time, I would elect to believe that price is going to take out the sell side liquidity. So my stop loss went beneath this low in here. And the reason is because it was underneath basically 3 PD arrays. We had an inversion fair value gap there, this order block there, and this inversion. So if I'm entering in a price, I particularly want my stop loss to be underneath at least 2 or 3 PD arrays if I can. So we dropped down in here. It didn't take out sell side liquidity. This ended up making a bullish SMT. I believe ICT went short in here, which I have no idea why he would be doing that. And again, it's tongue in cheek. I think he knows what he is doing purposely. You see everybody talking about it. Call me conspiracy or delusional, but that's the way I'm viewing it personally. I think he's taking those losses purposely, just so he can get everybody riled up before Robin's Cup, and then he sets the tone for it. That's the way I'm viewing it. In here, this is where we started to displace higher, and I was analyzing NQ, and I was looking at ES at the same time going, well, I got stopped out. But when I was looking at ES was still residing at these lower discount levels, and it has not even reached up to its buy side liquidity pool. So as ICT would call it, the six sister approach, if one asset class is still lagging behind the others, you can elect to trade that one with the same mindset that you were trading the other one. So I got stopped out on NQ, and I was seeing that at this point in time, we were already moving towards the buy side liquidity. And I was willing to enter into this for value gap, but it left me. So I was like, you know what? I can't really trade NQ. It's going to reach my terminus, which are these two levels there. But ES was still relatively far away from these relative equal highs in here. And there was another higher time frame buy side liquidity pool in there. So for me, I'm understanding that I'm overall bullish. They're all overall bullish. And with NQ, what is this entire model in here? This is the 2022 model taught straight out of his YouTube channel. Right at the opening, going into the silver bullet, you're dropping down, taking out sell side liquidity. What's the narrative of the day? Bullish. What am I looking for? Only longs. So in here, I wasn't paying attention to ES. Admittedly, this is a very clean, beautiful entry where you have a fair value gap in here. This down close candle to the left of it is your bullish order block. So even though to some people that's not a shift in market structure, with turtle soups, you particularly don't need a shift in market structure. You need an energetic displacement away from that sell side liquidity pool or buy side. So we energetically displace higher, drop down in that fair value gap, bullish order block, small fair value gap underneath it as well, displace higher. So at this point in time, I'm looking at NQ and saying, well, I missed the entry. I got stopped out on it. It's going in my initial direction. My bias is still correct. Everything is still there. So I took a look at ES, and that had a better clean entry for me to take in terms of risk to reward and where I could position my take profit. So in here, I went long inside of this breaker. So it wasn't the perfect entry, but I was willing to take a little bit of drawdown on it. And I believe ICT did as well. And I'm not sure why he got stopped out on this either. But for me, I placed my stop loss underneath this breaker because it's all of these last up close candles. These consecutive up close candles are your bullish breaker. Because you have a low, high, a lower low, then a higher high. So inside of that breaker, there's a fair value gap resting right at the mean threshold of it. And anytime you see that pattern, that is like a launch pad. It's a beautiful pattern, so easy to see, and especially when it's paired with a good narrative and a good drawn liquidity, it is bread and butter. It is something that if I see it, I'm taking it 10 out of 10 times. So we dropped down into it, took a little bit of drawdown, and then we displaced higher. I took out a partial above the buy side liquidity pool there, and then another partial above the buy side liquidity. And what I was doing was using basically an inverse swing for standard deviations for basically target projections. So we had 0.5 negative lining up basically with the buy side liquidity pool, and then I had -1, and that's where I took out the remaining portion. From there, we still trended higher. We moved higher from there. I'm not going to go over the entire day. I'd rather go over NQ and wrap up the video. But I think all of this price action moving into PM was really smooth. This is something that I wish would occur this week in the New York session, because it's just been like this where it's just not smooth swings. But this to me is beautiful. This is the type of price action I want to see, is where you're having a buy side liquidity being ran. You have another buy side liquidity pool being ran here. There was bearish SMT with YM or Dow. It was making a higher low, so it didn't take out this buy side liquidity in here. And you see a drop off lower. What is this? This is again the 2022 model. When you have good swings on futures, index futures, man, the 2022 model will repeat multiple times in a day, and it is a beautiful, beautiful model. It's the reason why I have it in one of my charter member models on YouTube. Nor am I claiming that it's my model. It's just something that I utilize, so people stop asking me. So in here, we're taking out buy side liquidity. That's first step, right? Drop off lower, shift to market structure, return back up into a fair value gap, resting inside of what? A premium. So it's from swing low to swing high in here, that's a premium. And I'm not sure why this is green. So equilibrium, we reach up into a premium, fair value gap there, IOFED it, and then we drop off lower. And what are we attacking? Sell side liquidity pool there. And then the pre-session or session sell side liquidity underneath the low there. And look where the standard deviations line up beautifully. So go into this whole PM session. I'm not going to make this video any longer than it is, but you can see in here how beautiful price action really was. You can see the fair value gaps. You can see where price is reaching up into it. Go into 1 minute, study it, put it into your journal, because those are the type of conditions you want to be inside of. So that's going to be it for today's video. I just want to do a quick recap. I will be live streaming tomorrow, 15 minutes before the open. Until then, good luck and good trading, everybody. Be safe.